Hello, everyone watching on YouTube, listening on Spotify. Today's another episode of NRG Insights. And for those that don't know, the NRG Insights podcast is all about, funnily enough, insights, but specifically into the world of financial services, speaking to significant figures and people that can kind of add value to everyone else that listens in. And whether that be from lending or broking or kind of ancillary partners to the lending world. So on that point today, we've got Michael Clifford, who is the Commercial Director at Signature Property Finance. Nice to see you, Michael.
Yeah, good to see you again,
Uh,
Marcus.
I lost you then. So just speak again.
Yeah, good to see you again, Marcus.
Good. So talk to me about tell me about your personal journey, your financial services journey that's taken you to Commercial Director at Signature.
Yeah, no problem. I'm not sure whether I'd describe myself as a significant figure or anyone who can
Oh, you're
add
influential now.
value,
You're
but
here,
I'll
mate.
give it
Yeah.
I'll give it a shot. No, so in terms of my journey in financial services, I think like a lot of people, I fell into it. I finished my degree in sports science in 2006 and left university with every intention of being a PE teacher. Um, and went across to the States and coached football for a while, and mainly working with kids, um,
Yeah.
and realised that I didn't have the patience for kids,
God, tell me
and
about it. I
yeah.
coach kids rugby. Drives me up the wall.
Yeah, I've fallen back into that as well with my son's football team.
Yeah.
Um, but yeah, so I realised I didn't like that. Did a bit of sort of sales while I was out there as a second thing, and thought I'll look
Yeah.
at graduate schemes. Um, and yeah, and ended up on Santander's graduate scheme. I started in September 2007, which
Good
for anyone who
time.
doesn't know, yeah, is was pretty difficult time to start
I tell you what, though,
in
as a graduate, it's not the end of the world, right? Is it? It's not like you go, "This is all you know," isn't it? This all you know is the horrible market that
well
happened.
well well that's it. I was put into the deposit gathering team, and I thought that was quite interesting. I didn't realize that there was a liquidity squeeze on, so that everyone had to raise their own deposits, and it became such a core part of the business. So it worked really well, actually. And I then you ended up working as a relationship manager in Santander, based in Leeds, and I was really fortunate. Um, the time that I joined, it was when Santander were really trying to grow their presence regionally, so I got
Yeah.
access to a lot of stuff. B, because they just bought Alliance in Leicester, and there was a lot of workout stuff related to the Alliance and Leicester backbook that needed doing. Not that they did bad loans, just that the market changed
Yeah.
so drastically.
Do you know what? I
Um,
got a loan with Alliance of Leicester in my first wedding, and then that's why I remember it moving to Santander. That's the only other
yeah,
contact I have with them is that the loan moved.
smarter investors, and then we then yeah so I worked there, and then lastly I had a great boss first off, who sort of took me under his wing and showed me the ropes of real estate finance,
Yeah.
and so that was great.
I will come back
Then
to that. Carry on, but I will come back to that great boss thing because I think that's really important. But sorry,
no,
carry
I think it is, and that's why I sort of mention it. And then um, through his sort of promotion and sponsorship, and a little bit of my own hard work, I was then um, put forward for Santander's global management scheme. So I went from an office in Leeds to spending 3 years working in um, Boston initially, and then Madrid,
on. You'd already
which was
had the
great.
American exposure, yeah, because obviously the
Yeah,
football
yeah,
thing.
yeah, yeah. So it was second time around. That was I'd worked when I was coaching. It was West Coast. Lived on the East Coast for a couple of years. Worked in Madrid for just over a year, which was interesting because I didn't speak Spanish at all when I moved there. Still not very good, but at least I do a little bit. So that was interesting. Um,
How
and
did you get
then
on that out of interest? How many people? Because that's quite a. I'm assuming that's quite an intensive course. How was that? Was that through that kind of mentor side of things, or I know you said Clearly, you were good at what you were doing as well. But how did that come
Yeah, no,
about?
it was a program that ran every year, and you sort of got a little tap on the shoulder to say, do you want to, we would nominate you for it if you wanted to apply.
Yeah,
Um, so so I applied. There was 2,000 people globally applied.
yeah.
You had to go through a pretty intense interview process in the head offices and stuff like that, and then out of that, 20 people from around the globe got selected to go on it.
Wow,
So
that's quite an accolade to get through that.
yeah, no, it was good, and I think it gave me a real different perspective on everything. Gave me a different idea of how banking works, and
Do you think that's helped you actually? Do you think that's helped you coming through that kind of corporate background and you go into smaller business? You kind of because if you've been very pigeonholed throughout your career, you don't really see the other side. Do you know what I mean? Do you think that's made an impact?
in the short term, I actually came back and felt like it hadn't helped me at all,
Oh, really? It's
um,
interesting.
because you felt like you'd taken 3 years out of sort of that linear development
Yeah, yeah.
process, been dropped back in, and the people who had just solidly gone at that for 3 years were
Gone
sort
up.
of had sort of progressed up,
Yeah,
and you
yeah.
come
It's
back and you were
interesting.
like,
Yeah,
I'm at the same level that I would have
yeah,
been
yeah.
if I'd have stayed anyway. Um,
Yeah,
but it actually over time, it definitely has helped me just with having a wider perspective on how
yeah,
things
yeah.
work.
If you look at your job titles now, and then you probably look at the people that maybe did surpass you at the beginning, I'm sure it's relative, isn't it, to the fact that possibly a lot of those aren't at that level now, or they
Yeah, no,
hit that kind of ceiling because you haven't had that.
I think that's definitely it, and I think that some of them have gone on and done brilliantly at Santander, and they're in one of the lads who um, we were both over in Madrid is now absolutely flying in the wealth management and insurance sector.
Yeah,
Um, I enjoyed real estate finance though, and Santander really didn't want to stay in real estate finance. They,
no.
like most clearing banks, the margins weren't there for them. Fair enough. And so you being able to go out into the world and say, I've done this, I've got this experience, this background, I've worked here, and has been a massive help in terms of my marketability moving outside of Santander. So yes, it has helped me more in recent years, but initially when I did
Yeah,
it,
yeah, more relevant now, right? And that's good though.
I
If you
said,
didn't feel it at the time,
yeah. No, it definitely has helped, and I think having that opportunity, they're the opportunities that only those big global organisations can provide.
yeah,
But it's a trade off. Everything's a trade off. Is one of the things that you sort of I've sort of picked up. There's no perfect um, role. There's only the perfect role for you at that time,
yeah.
relative to everything else that's out there. So, I think that is certainly it is something that's helped over time. Yeah.
Nice. And how? So talk me through that transition now to obviously
Yeah,
where
yeah.
you are
Sorry,
now
yeah.
in the real estate world.
Yeah, so came back. I worked for Santander then up until 2018, and I went across to Hodge Bank, then moved across to Wales. Wife's Welsh, and I'm that good at negotiating that I ended up moving to
Kids
Wales.
Welsh, kids
Uh,
English.
yeah. So yeah, I've got to say I love it here, but I moved to Hodge Bank, who were a specialist lender looking to grow in the real estate space, and ended up being head of buy to let there. Set up the buy to let division in the commercial part of the bank. Um,
Yeah.
and it sort of, I think I didn't realize what a challenge it was at the time. I just sort of did it, but I sort of took that from an idea on a scrap of paper to a business unit in 3 months, which I had to beg, steal, and borrow processes and
Yeah,
documentation and
yeah.
stuff. But
It's interesting, isn't
uh,
it, when you look at something like retrospectively, obviously, you look back because
yeah,
at the time you're just deep in it, aren't you? You're just doing one bit at a time to get something done. You go, actually, that's
I,
really impressive that I've got that. I've got
yeah,
it done.
I was told it had to be delivered by May, and I didn't,
Yeah.
because I didn't have any perspective on what was required. They just went, okay, yeah, that's
Yeah,
fine.
yeah, yeah. New
Um,
products, new processes, new
yeah, it's
everything. Yeah, new
exciting.
team.
I'll crack on and do it. And that was a really good learning experience in terms of, at the time,
How to get shit done really quickly.
yeah, and you know how actually you don't need to have a finished article to actually do something. You can, you can sometimes spend too long trying to get to perfect when good enough will do,
Yeah.
for you to
Do you
learn,
think we
and then you
suffer
can
from
put
that
it.
a bit in financial services with shareholders, etc., where, like, I know it's a cliche, but like the paralysis by analysis, where you you're trying to get a product so perfect, and actually option one is better than option none, as we say. Yeah, I know it's a bit different because it's a product and
Mm,
it's a lot of money, but it's just worth getting stuff done and then seeing how it works and tweak it. Like like Apple bring out upgrades all the time, don't they? They don't. Your phone isn't finished when they give it to you. It's the best they can do at the time, and then you just upgrade it and
yeah.
get better.
The, in certain, I think the challenge is to deciding where the aspects are that you can take that view, because there are certain aspects, a process or an application form or a um, whether you need to be fully online or not. You can be like, okay, well, we can develop that process over time as long
Yeah,
as we've got the key elements there and the customer journeys defined. We can do that. Clearly, the bits where you can't is where it's like, well, what capital bucket does that fall in? Well, let's just see, because that can have a massive
again, yeah,
impact on
yeah,
profitability. Or what does the credit policy need to look like?
yeah. We'll
You've got
work
to
it
have
out
those.
tomorrow.
Yeah,
Yeah, yeah,
and you can, yeah, I'm not saying you can't adapt the credit, but you need to be fairly sure that your risk is contained and managed. So
yeah. That's
there
be pretty
are,
robust first.
yeah, there are certain aspects where you can take that view. But one of the things I do think we suffer with in financial services is um, a, a we're all risk professionals fundamentally at some level. So
Yeah,
we can we can overemphasize the risk without thinking about, okay, well, what's the potential benefit?
yeah. Water solution.
And
Yeah.
and is the risk a real risk or is it hypothetical risk? Um, and there
I think,
are the
do you think that's again just people don't want to make the mistake, right? So you keep um, not overthinking because, like you say, it's important. Financial services products are important, but maybe just you're nervous about like over nervous about risks as opposed to thinking of getting the product out.
yeah, no, there isn't it. As I said, there's a balance in it. But you can be in you, it, the ones where I do find that is, well, you're sitting in a meeting and someone will say, well, what happens if no one buys the product? And you're like, well, then we'll change the product. What happens if
Yeah,
too many people buy the product and it knocks our service levels out?
yeah,
Well,
yeah.
we'll
Just
just
to
we'll
face that.
just slow it down. We'll increase the pricing. We'll do what needs to be done.
Although that's a
So
lovely problem to have. It's only to increase
and
the
and that,
service levels.
and there is that element to it. So there's there is an element where you need that challenge, but some decisions can be a bit slow, and and sometimes financial services. One of the great things about financial services, I think, is that it brings in people from a diverse background. You don't need to have a set degree or
Yeah,
a set of letters after your name to be involved in it.
yeah, yeah.
Um, you have to demonstrate, that but the drawback of that is that if there was that element there, you could probably focus people's minds a little bit more on certain aspects of the
Yeah.
job. I think one of the things I've found is that perhaps an influx of, don't want to slag them off too much, but
Go on.
an influx of accountants into senior roles in banking, and
Yeah,
um,
yeah.
you,
You
you
can. You
then
only need one FD. You only need one person blocking everything. Don't you? You don't need
and
millions.
yeah, and you then end up where you look it up and you go, the CEO's an accountant, the COO's an accountant, and the CFO's an accountant, and the treasurer's an accountant. And
No
so,
risk adversity there at all, is there?
yeah, and also, as long as it looks good on a spreadsheet, then we'll launch it, rather than actually what's the,
Yeah, yeah.
think
How
about it
people,
from the
like you say, like how
sales
the
and
customers
marketing.
take it, and how's the
Yeah,
journey, and that kind of thing.
yeah. So
That's a
so yeah. So
diversity thing as
there was
well,
an
right?
element to that. Sorry,
Do
what
you
was
not
that?
think that's a diversity thing as well, isn't it? Not
Yeah, no,
just
no.
diversity in boards comes from the background side of things as well. Don't it? Like you say, if everyone comes from the same background, you're all going to have the same answer. You're going to nod at each other and think it's a good idea.
Yeah, no. I think that's definitely the case, and I think as long as people acknowledge that they want that diversity and open that up, and that the diversity is still from people. It's still a meritocracy, and that
Yeah,
just people come from different backgrounds. I think that's a really, really positive thing, and I think that's one of the things that the specialist finance market has done really well in the last few years. A lot of people have come from clearing banks. A lot of people have just come straight into the specialist finance market. A lot of people who have established specialist lenders have done so because they've come from a developer background or a broker background
yeah.
or other backgrounds, and have been able to
You know what's
find a
funny enough?
place.
I was speaking to an MD the other day of a development business, and he was a developer, so he can actually look at it on the. He's been the other side, of a crap deal, or he's been on the other side where he's felt like it's not worked. So, like you say, if you've never seen the other side of the customer journey or haven't had that diversification, it makes such a big difference, doesn't it?
No, exactly, and I think that, as I say, that's one thing the specialist finance market has done really well in the last 10 years. And I think the challenge is now, how do you maintain that? How do you keep that
Yeah.
innovation and that diversity of background coming into the market, um, and providing fresh perspectives and fresh ideas and fresh growth
Yeah.
areas and things like that.
Well, let's talk. Let's go through that actually. How do we do it? Because financial services as a whole has always been white middle-aged men in grey suits. It is
Yeah,
starting to change, especially. You're right, it does change a lot there. But how do we? Our kids don't want to be in financial services. Do you know what I mean? How do you actually change that?
yeah, I
How do you
think.
bring in that new talent? How do you start developing that, or make it look like people want to be in it that aren't
Yeah,
middle-aged
no,
white men?
I think. I don't think there's a challenge with making it look like people want to be in it, because it is, you know, I think there's elements of it that are innovative. It moves relatively quickly. You know,
Yeah.
you can, um, you can take a number of routes into it, so the attractiveness is there. But um, it's, if I look at a lot of the challenges that we have when we're recruiting,
Yeah.
for, whether it's BDs, or whether it's for relationship executives, or whether it's for, sort of, collections, or whatever the role is. you,
Yeah.
you're looking at it and you're sort of saying, right, we're in most cases we're PE backed, or we've got some equity that's demanding growth and growth in
Yeah.
the
Yeah.
short
Need
term.
some money
And
out the door.
yeah, and so you generally turn to, can we find the experience to deliver that? And then you end up, the same cast of people circulating between
100%. That's not even anecdotal at the
organizations.
moment. I've never seen the market where if I have a good BD, because the trouble is, same as every market, right? There's some really average people that want a lot. If I
Yeah,
get a good business development person at the moment, and we're not talking about training up good internals, that kind of thing, someone who has a base, I'm getting 4 or 5 offers for that person. And some of them are ridiculous,
yeah.
because everyone's fighting over the same 6 people. Do you know what I mean? It's
Oh,
it's it's a
absolutely.
tricky one, isn't it? But we have to combat that
Yeah, yeah.
somehow because there's going to be a skill shortage very shortly.
Yeah, and then, I think to do that though, and take that approach um where you bring in new talent, you've almost got to say, okay, there's a 18-month, 2 year lead in time before they're up to speed. Which, um
Yeah.
does that
Everyone's
mix
18
with
months in
the.
front, are they?
Yeah, yeah.
Yeah.
No, that's it. So, how do you identify that? And I suppose the approach that we've taken with a couple of the hires that we've brought in recently is, you sat in the room with them and they're coming up with fresh ideas as you're talking to them, or they're really excited about something. They're going, and we could do this, and we could do that. And as soon as you're in a room with them and they're coming up with ideas that you haven't thought of, and you think,
Yeah,
well,
yeah,
I don't want them working for someone else coming up with those ideas. So come in and work for us. And we've done okay this year on recruiting potential. I think the challenge for us
yeah.
now is we've got to motivate and challenge and develop them to
And
realize
it is a
that
bit wait and
that
see as well.
potential.
Like I always say this about training academies and stuff. You do need deep pockets and patience, and not everyone's got both.
Oh yeah, well,
You know,
yeah. I mean, it's like any walk of life, isn't it? The one that always resonates with me is football. It's like how many the next Messi's do you see coming through, or the next such and such a players are down, or whatever, and then maybe 1 in 10 make it to that level. The others might do very very well
yeah.
and be very very good, but they never
Mm.
make it to the level that their potential sort of suggested. And is that their environment? Is that the ego? Is that a lack of management that they've been provided with? Whatever it is, or just misjudgment of how much potential they had. But the
Yeah.
how do we
Well, that's a
identify
good
that, and
point.
how
I
can we
think
get more?
that's about management.
Yeah, yeah, exactly.
Sorry,
And
carry on. No, carry.
no, it's exactly that. And I think I was fortunate early on in my career to have good people who invested time and effort into me, and I'm keen to try and give that
Do you
back
think
where I
that's
can.
why? Do you think that is why you're so committed to that about bringing in new talent and that kind of thing? Because the fact that someone had done that for you, so you can see the benefit in it.
Um, I think potentially, yeah. I mean, you know, I'm when you say committed to bringing in new talent, you want to put the people around them to allow that talent to flourish. And
Oh yeah,
you
yeah.
so
Yeah,
so
your whole
so
team
so
can't be new.
yeah, you need that experience there
Mm.
to help them grow and take the best bits from that, but innovate as well. Um and yeah, but there's definitely an element where um you the right attitude and the right willingness to learn and desire to learn
Yeah,
can take you quite a long way, regardless of having 20 years of experience or what behind you. That having that attitude and aptitude and want to go out and um, be to some extent a bit humble and say, can you help me sell to this guy, or can you help me give me the products to sell to this guy, or whatever else. I don't really understand what I'm being asked. That having that attitude and that sort of humbleness isn't innate
do you think
in
we're
a
losing
lot
that a
of
bit?
people. Pardon?
Do you think we're losing that a bit when it comes to like the Gen Z type, afraid to ask generation? I do feel like people don't want to cock up, whereas actually you know that the more you cock it up. Well, I mean, I just had grew up in a very heavily targeted sales environment, and it was very harsh. It was very, and I know it's very different now. But then it's also
Yeah.
to the point that people are afraid to fail a bit because maybe it's just the way you see stuff. You don't see many people failing, do you? You just see success all the
No.
time on YouTube and every social media, that kind of
Yeah,
thing.
yeah.
Do you think
Yeah,
you
no.
think you kind of have to try and install that in or get it out of them?
Um, there's probably an element to that. I think I seen the interview you did a couple of weeks ago with Guy, who's an old boss of mine as well. After Podger went to Glen Hawk, and we worked with him for a while, which was
Yeah,
a real good learning curve into the bridging market, and understanding
yeah.
how that works and what sells, what doesn't, how price fits in, and service interacts. I think it's a really interesting market. But he sort of talked about that. Giving people the space to make mistakes, and that there is an element to that. And look, we're in a market where most people work, well, from a sales perspective, most people work remotely in the specialist finance market. They're
Yeah.
out seeing brokers on their own every day. Now we can put the structures around them, give them the training, whatever, but we can't be all over those conversations,
No,
and we
no, you're
can't
not checking it.
micromanage them. And you know, um, when we have relationship managers who sort of structure a deal and send a credit report in, and the quality of those credit reports can be quite mixed, which and some of them miss out key elements of the deal when you're reading through them.
Here's a question for you, Mike, about that. Here's a question for you on that side of things. Would you rather have someone who can bang on 1,000 doors and their credit understanding isn't top notch, or would you rather have someone that is a lot less, but their technical knowledge is? I mean, obviously everyone wants both, but if you had to have one, what's more important to you, like the technical side of things, where you could write a credit paper, or actually just the person that goes out and wins business?
I think it depends the stage of your growth you're in. I think at the moment, for us, I think you can teach the credit side. You've got to have a foundational knowledge and an understanding to be able to go out and have those.
You've still got an authority when you go and speak to a broker, haven't you? You can't
and that was where I was getting to with that. As long as you're identifying those weaknesses and saying, okay, you missed this out of your credit paper. That's important because this, and this. So you need to really address that when you're next going out and having those kinds. That's absolutely fine. But you can teach the credit side. You can teach the products. You can teach teach most things. You can't teach that willingness and that perseverance to pick up the phone or knock on the door 100 times, get 100 rejections, and still knock on that 101st door to get a sale. So, that's certainly a trait that you definitely, if someone can demonstrate that, that's a really attractive trait, and probably is one of the key traits of those key BDMs that you're getting 4 or 5 offers for.
They just want to go out and graft. Although you'd be surprised, I genuinely think, obviously been in it a while, without sounding like a grumpy old man, that the BDM landscape has changed a lot in regards to, I think, like with COVID, people got used to not going out and seeing people as much. I am getting that kind of vibe of, well, why would I need to go out that much? Maybe that's a newer BDM thing, or maybe it's, maybe that's anecdotal just because it's happened a few times recently. It surprises me because a BDM when I grew up was on the road all the time, shaking hands. And then obviously you couldn't do it at all, and now it's edging back. But I think people maybe got complacent as to what actually developing relationships is.
Yeah,
I want to slag off any BDMs, by the way. They are my bread and butter, but I just.
Do you know what? We're talking about this with BDMs. I'm going to hold my hands up and say, being a BDM day in, day out is something that I haven't got the resilience in respect of that to do. I've got resilience in other areas, but so I do take my hat off to BDMs.
Do you know what I say this to brokers as well? Because brokers seem to think that BDMs have got an easy life because they've come to their place and given them donuts. And I said, if I'm out on the road for 3 days, and that's even, I don't even drink, so you're not even including like going to evening stuff. It's exhausting doing that 5 days and then go to the next one and making sure your credit papers are in and that kind of thing. You're absolutely right. I don't think if you're not in that world, I think people think they've got a relatively easy job.
Everyone thinks everyone's got an easy job when you look at it that way.
I just move people.
Because as you were saying before, the only bit of your job that you promote to the world in the culture that we've sort of ended up in is the really positive aspects of the culture. And you don't see the graft, the difficult cases that have been dealt with, that there's been a credit decision on, and the broker then phones up the BDM and goes, "Why is this case being declined?" And the BDM goes, "I didn't even know it had been yet." You don't see those aspects of it, and I take my hat off to them. And it is a numbers game in all respects. They've got to go out and knock on enough doors to get enough applications to get enough completions, and it's
a relationship game, isn't it? It's a relationship game, because if it wasn't, everyone would go to the one lender with the cheapest rate. There's 240 lenders, So it
Yeah,
is more about that delivery and a relationship and making sure like this. It's much more nuanced than I think if
yeah,
you're not in that
and
market, then it's
that depends on the product as well. I think, if you're looking at a straight bridge, the pricing is more important than if you're looking at a heavy
yeah,
refurb deal with some complexities to it. You need a lender that can deliver, um, and
yeah.
has got.
But I think it's
Um,
the same as a bridge as well, right? Because everyone can offer a cheaper rate, but not everyone can deliver. I
yeah,
think
yeah, yeah,
deliverability. I think is across the
yeah, and the other bit is, is the lender gonna stand? What's the lender gonna do at the end of the term? Is he gonna a day over whack on a 5% extension fee, or is he gonna say what's the exit? Okay, no, I understand the finance market is a bit tight at the moment.
yeah,
Okay, we'll arrange something that works for both of us.
yeah. There's a few,
Is
aren't
he
there? They
gonna
got
say? Yeah, so it's there is a relationship play to that, and I think um, I seen a stat the other day. I don't know how true this is because stats can be misleading and depend on the sample, but it's something like 91% of borrowers who've taken an unregulated bridge have taken more than one.
yeah. Well, it makes sense, doesn't
So
it? Because your
so
money's
so
tied up, and you get another one, they get another
yeah,
one. They're
the
professionals, aren't
yeah, and but it shows that the market is doing something right in terms
they?
of the
Yeah,
service aspect, because
yeah,
it's not the cheapest lending that you can have out there. It's all about helping borrowers, you know, achieve an outcome and delivering on delivering on their plans in a way that the clearers or the challengers can't. So,
yeah,
um, it's not a price led market in the set if when we're competing with other sectors and between each other, it probably has an element of price, but um, having that service there, having the speed, having
yeah.
the flexibility, having the access to people who make a decision, so you get a quick no or a quick yes, or can add value in the structure. That's really important in this market.
Yeah. Do you know, I've just gone off on a tangent a little bit, but I've got to get it off my chest just because someone deleted me on LinkedIn the other day for it. Because you're saying like it can be expensive and that kind of thing, but it's a solution, right? You don't have the money
Yeah,
for this development. We are going to fix it for you. So there's a developer on LinkedIn, and it was a bit of an echo chamber of developers going, "Oh, poor you," because he was like, "It's taken my 700k profit, and the brokers charged me 20 grand, and blah blah blah." And I put underneath, 700 grand sounds like you defaulted. Um, you know what I mean? Like no one's taking that up front. And I also put, you talk about tier four lenders. The broker would ask tier one, two, three first. That's obviously where you're at. And he kept calling it a necessary evil and like they're robbing us. I was like, you don't have to be a property developer with no money. So I said to him, these are people that are providing you solutions, and you're talking down to them as though like something's gone wrong with your development, and then it's cost you a lot of money. But you've borrowed money off someone, so it's tough shit. It's their money,
yeah,
and surely you read the T's and C's. Anyway, I got deleted, so I thought hopefully he watches.
yeah. No, fair. I think, as I say, we do a lot. Obviously, we look at the front end, but we obviously need to achieve our exit to get our money back. Otherwise,
Yeah,
it
yeah,
costs us more money, right?
yeah.
And
It's
so
costing you money as well, isn't it? It's not just cost. I know the developers like it's all being on me, but it is on you to pay it back.
yeah, and we, I think most lenders in the space will always work with a borrower. The the bit where it goes wrong is when the borrower stops working with the lender,
Yeah,
and the
yeah,
lender goes, okay, well, if you're not working with us, then this is why we took the charge over the asset.
yeah, yeah. Of
We
course,
don't want
just in
to.
case you did
We
this thing
want
that you've now done.
we need our money back so we can go out and support other borrowers. If you can't give us our money back through your primary means or secondary means, and you've stopped engaging with us on what the tertiary means might be, then the only
Yeah,
thing we've got as recourse is the asset that you gave us.
charge them more
So,
money. Yeah.
or we'll say, if we're going to charge you the toll rate, or you.
I think that's the other thing as well. Like you have to explain to them, go, this money is earmarked for something else, and you're sat on it. You know what I mean? So you have to be charged for it, don't you? It's just the nature of the
Yeah,
beast. I don't
but
want to go down that negative route. It blew my
no,
mind that I didn't even have a debate with me about it.
but I would, yeah, that's the big thing, and 90% of the time where a lender takes that route is not because there's something wrong with the property per se. It's because the borrower stopped working with the lender. The borrower said, you know what, yeah, it's not going to plan, and I'm throwing my toys out the pram, and I'm not even going to
Yeah,
engage
I've
with
thrown
you.
the
Well,
keys at you.
there's no option left to us but then to appoint a
Yeah,
receiver or to appoint
yeah.
someone to
You're
help us
you're not a
realise
property
that.
business, are you? You want to bet your money back, you know.
Yeah,
It's
but we'll all, and most lenders in the market will always, if you've got a borrower there who's like, look, I need some help, work with me on this. Most lenders will go, okay, we'd love to help. Let's sit
yeah,
down and chat about a way it may work that we can,
yeah.
work towards a repayment, but also support you to achieve your
Yeah.
exit because
Do you know,
this market
I was
doesn't
having the
work.
same conversation with a couple of lenders the other day, and it was the same thing. One was getting the other one out of a bridge, etc., or a development loan, and there was shortfalls, and then they got downvalued. But the three got together and said, right, you put a little bit more in there, we'll take a bigger hit on that, and we'll take that, and it's just coming to a commercial decision, isn't it? Rather than just going, the borrower could have just stopped answering the phone, and then it would have gone
Yeah,
nowhere, and then obviously charges being racked up. So it's just about having that sensible commercial awareness.
yeah, and it's become more prevalent in the last couple of years because of the way interest rates have moved,
Yeah,
which has made it more difficult to exit because your buy-to-let rates have gone up, which is a big form of
yeah.
exit from a bridging loan. Mortgage rates have gone up, which is another big form of exit. Um, Commercial real estate lending has become more constricted, which is another
Hmm.
exit. So that has become a more prevalent, and I think lenders are better equipped now to help their borrowers work through those issues than they were in the past, even though they were pretty good
Yeah,
at that stage as well. So if there are any borrowers watching or whatever, then you just keep in contact with the lender. The lender
yeah,
is
yeah.
there
And
to try
it
and
sounds like
find
it's
the
really
biggest
obvious
possible
advice,
solution.
doesn't it? But it's the same
Yeah,
as anything, isn't it? Communication,
yeah.
like, is the key. They're not. No one wants to turn you over. Yeah, everyone wants their
No,
money. Everyone wants the outcome, the same outcome.
yeah, and no one wants to deliver bad news either, but bad news is much better than no news when you're
Yeah,
when you're a lender.
yeah.
So
Do you know
yeah,
what? Yeah, it's a tough one, isn't it? Because you can't keep saying the same thing to someone, but at the same time, you have
yeah.
to keep the communication open. So talk to me about what the plans are for you guys at Signature and kind of 2025. How you see the market going and moving on from there.
Yeah, we're a bit like Bitcoin. We're like to the moon and that. No, no. In all seriousness, we're
Yeah, 100 grand this
we've
morning.
yeah, no, we've got a we we've got some really good plans for next year. I think
Yeah,
we've got it's a business that's been going since 2012. Tony, the chief executive's been there since the start and has grown a really solid business,
yeah,
um, and has put some great people around him. The chief operating officer Tom um, is a solicitor by trade, and we talked about diversity of background, and
yeah, yeah,
he's done that side of things. Which we were talking about this yesterday. You take the whole lending journey. There's big bits of it that even if you're from a banking background, you can't help with because you haven't got
yeah.
that legal qualification to do or whatever. So he's got that. And David, who's the FD, is a strong operator in the
You better
sector.
have an accountancy background.
Yeah, that's it. He has, but we've got a good management team there, and
Yeah,
we've got a really nice, settled, um, diverse, age bracketed sales team as well. We've just brought in our first internal BDM who's going to help support the external guys.
yeah.
We've got
So is that what you're doing at the moment? Are you building out that structure for next year and getting it kind of
so
process wise? Have you got it?
yeah, I mean the process is we're always looking at where we can improve the process, but fundamentally the process is what it is. It's about
Yeah,
getting the people around that process, and looking at our products. What can we do to help deliver more assets into the
yeah,
market?
yeah,
How can how can we make more? But the vision
Actually,
is
let me ask you this, Mike. Sorry, oh no, sorry, finish
yeah.
that. Sorry,
No, no,
I'll give you a question. I ask a question, then I give you another
no,
question
no, no,
after
it's
you
fine.
ask. Sorry.
No,
I,
the vision is to just keep that, keep that, accelerate that growth through the next couple of years, and we've got the key aspects that feed that. We've got a lot of discussions ongoing that will optimize how we're funded, where we where what our products look like that come out of that, what our pricing looks like in the right areas. That doesn't mean reducing pricing across, but it means getting the
yeah, yeah, getting it
optimized
right.
pricing. We've got some great product features we're looking at in for later on in the year, but fundamentally we feel like we've got to a position now where we've got a strong team, geographical coverage of most of the country, and some a good foundation of products, and we need to. I think a big challenge for us is how do we tell more people about what we do, how we do it,
Yeah.
and
Oh, well,
and
that was
and,
my
and,
question that I jumped
and
in
do
on
it.
earlier on, and that was about how you separate yourself from the crowd. I mean, I keep saying
Mm.
240 lenders. There's less now because the market we've just come through. But
Yeah.
that mid market is tough, right? There's a lot of you, and there's only so much you can do to maybe get your head above the parapet. But what do you see as a way of doing that?
So yeah, I think that is the key challenge, and anyone can say, well, we're going to offer a new product, we're just going to put on assets, we're going to
Yeah,
do massive LTVs, and we're just going to lend to everyone.
yeah, yeah. Well, you've got the same as like saying we're the fastest. When you
Yeah,
mean
I think for us, it's about defining, and we're in the process again. Who are the brokers, who are the borrowers that we can best service, that our value proposition aligns with most closely, and how do
yeah,
we then communicate that value proposition clearly into the
with
market?
those.
And
Yeah,
so it there are a lot of lenders in the market, so going out there and saying we'll do anything to everyone won't stand the first test, because
no,
someone will just throw a weird
we'll
left
do
field deal at you
that.
from a
Yeah,
with a someone who's a tech, or is a from a country that's on the sanctions list, and you go, oh no, we can't do that. And they go, well, you said you could do everything to everyone.
everything. Yeah,
That,
yeah.
yeah, that's not, you're never going to do that. It's got to be clear about who is the part of the market that you're trying to serve, and where do you add value. Um,
Yeah.
and so
True. You hit the nail on the head then about defining your target market and then adding value to it. Because it's easy
yeah,
to just go, I will just look for this particular market, but actually, what benefit are you to them? That's what I think
yeah,
you've constantly got to look at the
and
customer like that, haven't you?
sometimes it's about everyone's always looking at what can we do differently, what can we do differently, what can we do differently. Well, on the flip side of that, what do we do very well that we don't shout about enough?
Yeah. Yeah, yeah. What
What
can we do?
what what
Yeah.
is it that
We do well and better.
you we've got brokers who quite openly say we love dealing with Signature, we love dealing with you, we love the fact that we can come out to a case, we can go back and have a conversation with head office and have we can have a decision there, then how we're
Yeah.
going to structure it, how we're going to do but if only they know about it and only they
Yes.
take advantage of it, then there's no growth.
Yeah.
So the growth has to come from us putting being able to articulate that better, growing the
Yeah.
people internally so that they're able to. We brought in
Get it
two
out there.
grads. We brought in a new BDM in the Midlands who's doing really really well at grabbing the bull by the horns
Yeah.
and going out there and doing that. But how can we bring their skills along so that they can articulate and take advantage of those things that people enjoy really well? So I feel like I'm in a quite fortunate position in this role, in that we do a lot of things really really well,
Just
and
let everyone know about it.
the challenge for me there is how do I translate that into clear communication that people understand in the market? How do
Yeah.
the sales guys go out and package that up in a way that can be sold and can be quantified and can be brought to life? Because as you say, it's easy to bring to life speed. It's easy to bring to life rates because you can go, oh yeah, I get that, blah 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 blah. But
Yeah.
if it's things like the ability to take a deal and come back with a solution that perhaps the borrower hadn't thought of, or take a deal and structure it in a way that meets a need that the borrower has that doesn't come off the shelf.
Yeah.
How do you package that, communicate that, and articulate that clearly in a way that the broker goes, oh yeah, I've got two
I can do
clients
that.
that I was working with 6 weeks ago that could have really valued from that value proposition. You know what? I'm going to
Yeah.
give you a shot on this. So it's it's a case of that's really where the growth in 2025 is going to come from, is the doing what we do now, continuing to do it exceptionally well,
Yeah.
and increasing awareness of the way in which we've done it very well.
That's every
So
business, isn't it? Like,
yeah,
it's pointless being the best kept secret in your in your world. Do you know what I mean? If you do something amazing, you've got to shout about it. But then you've got to shout above the noise as well.
yeah. There was
It's
two
got to be
aspects to
tangible
that.
shout, if you like. You know?
Two aspects of that which really resonate with me. When I started off at Santander, we were based in an Alliance and Leicester office,
Yeah.
and their slogan was the best kept secret in the commercial lending market. And I
Yeah.
just didn't get it. I was just like, well, why would you want
Why?
to be the best kept secret? You've
Yeah.
essentially said we're the most we're the poorest marketers in the commercial lending
Yeah.
market.
Sack the marketing
Um,
team. Do you know
yeah,
what? Honestly, about 3 years ago, when I really started building the business up and getting people in, I've done it for years. I was just kind of, one man band in it. It was a business coach who said to me, "You are the best kept secret in what you do. What is the point in that?" And I was like, "Shit, yeah, I've got to get out there. I've got to let people know what we do, because it's
yeah,
nuts. It's just like a pride thing of going, what do you mean you don't know what I do? Like, no
yeah.
one knows what anyone does unless you got to tell them."
No, exactly. And then on the other side of that, I read something the other day where it said that the best known beats the best, and that's probably an element, probably written by a marketer trying to sell the services. In fairness, but it was
Having
something,
McDonald's or Coca Cola is other.
yeah, and that was something that resonated with me, and I thought, okay, yeah, we we tell people, and we've clearly, the guys have built a business that is successful and is solid and has got good risk foundations, and that's a key part of when you're
Yeah.
going to maintain that. But um, but we can always do better at that. We can always be better known,
That,
and we
that,
can
is,
always
that is the
shout.
magic of shouting about your business, is having the core foundations of a great business to go to
Yeah,
shout about. Otherwise, you're just shouting the same as everyone else. We're really good. I've always said that
exactly.
I've got the easiest job in the world to go and tell people how good we are, because I genuinely believe we've got the best team. Or,
Yeah.
the way we deliver is the best you can do. So it makes it so much easier when you've already got the foundations of a great business.
Well,
It's just letting everyone know.
yeah, you've got to have that, otherwise it just falls apart.
Yeah, absolutely. I did say, I just looked at the time. I said I'd keep you half an hour. I do this all the time, but we're on 48
That's
minutes
fine.
already. You all right? Good.
Yeah,
Good. 'Cause
yeah,
so
no problem.
I know we talked about it previously, just about the planning side of things and kind of how you execute it. Maybe for 2025, coming out of a slightly different market. I know yours is all about um, increased awareness, but what else do you have to think about when you're moving into I mean, if the resi market gets better, the short-term lending market tends to take a hit. So we haven't had it too bad at the moment, but how do you plan ahead for a year where we don't really, we're still in a bit of guesswork, aren't we?
Yeah, I think there's two parts to that. I think the last few years we've had COVID, we've had Liz Truss's budget. I know she doesn't like getting the blame for it, but
Wow.
unfortunately, you get to. So we've been through that. We've been through, a change in government.
Interest
Um,
rates, wars.
Yeah, the world virtually going into world war, inflation respiking, whatever. You've thrown that at the market, and for me, it's been really tough. I think the
Mm.
challenges that I've seen, particularly through um, managing that initial part of COVID, and the second part, the interest rate spike at the back end of 2022, and how you manage through that whilst also continuing to serve the market. There were really, really tough things, but through those, the bridging market has had a real and short-term lending market, and the
Yeah,
specialist lending market in its widest space has had a real opportunity, and has done exceptionally well at proving its value,
yeah,
and showing that it's able to be flexible, it's able to be innovative, it's able to be um, it, it is a core part of the UK lending landscape now. If it
yeah,
wasn't,
definitely.
it'd have sunk.
Mm.
The, the 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 institutional backing that the lenders in this market now have, um, basically have transferred the clearing banks support for SME lenders, house builders, um, sort of developers, investors, and transferred that using their cash still, but
Yeah,
moved
yeah,
across to that specialist lending market, and it's essentially said I think the UK banking market is actually saying you're better at delivering into this space
yeah,
in
exactly. You
risk
deliver
manner
our money
than
better than
we
we do.
are.
Yeah,
So please, can you deliver it for us? And
yeah,
it's probably been the longest um, interview process for an industry that there's ever been. But the industry, from
yeah.
my perspective, has come out of it very well. The short-term lending assets deployed are higher than they've ever been. Um,
It's
you know,
literally kept the wheels of the industry moving over the toughest time of the long term market.
yeah,
It's
and so when you talk about flux in the market, yes, it creates a headache because you've got to try and get ahead of that flux and try and think, okay, well, what risks does this present? But it's also the times like that in which the bridging market, the short term market, has been able to prove itself valuable. And so,
yeah,
while I quite like interest rates to come down before I remortgage my house in the next couple of years. So from a personal perspective,
yeah.
it's
Mine's
a
going up
challenge.
in 4 days.
Oh,
Fun.
but
400 quid a month. It's easy. You find,
I
always had
know,
that.
I know, and and it's painful, but it's but from a professional perspective, I think great. There's opportunity there. That's got to be opportunity for more people to come and try short term finance, bridging
Yeah.
finance, development finance,
I
using
think it
us
just
to
it
help
opens
them.
up money. It just makes money more accessible to your average Joe
Yeah,
that can't go to Barclays, for
yeah,
or aren't hungry
and
for that business.
not just the Barclays, RBS, Santander, HSBC anymore. It's now the
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 bigger
challenger
challenge.
banks that
Yeah, yeah.
below that have become behemoths in themselves, very slow to react, very
Yeah, yeah. We
relatively
talked
slow
about
to
this the other
react.
day. Sorry, it's the natural progression, isn't it? Like even with small business, when you suddenly go corporate, it's a little bit like I'm going to use an example. Metro were cool. It built a great team, and now all of a sudden they're not even a challenge. They're a bank now, right? They're not a challenger bank.
Yeah,
And
yeah,
then they move into that bit that the whole reason you started was to beat it. But that's the natural progression of business, isn't it? Is that you end up becoming that
yeah,
thing that you joined the market not to be.
yeah, exactly. So I think it gives us opportunity to prove our worth to more people in the market, and so you know again it ties back into that thing. The challenge is to tell people that we're here. So when you've got those things, we need to take our slice in the market, and hopefully a little bit more next year.
Yeah.
So 2025, yeah, it's a bit uncertain. Yeah, been a budget which I wouldn't be surprised if a few of those things get watered down
Pulled
quite
back.
significantly
Yeah, I
by
think
the
so. Yeah.
time they come into practice. But that
But if
creates
anyone with
flux.
any business sense looks at it and explains it to them in an economic sense, they'll go, "Oh yeah, actually that doesn't make any sense. That is
Yeah,
charging
maybe,
so much money to stop
yeah.
building."
Yeah, you'd hope so, wouldn't you? But let's see. But yeah. So you know, the market next year and how you build that planning in. I think you've just got to back yourself to say that's our value proposition. We think that value proposition is valuable to the market, regardless of what the market does.
Yeah, and we hope the
And
market
and
agrees.
yeah, and so we continue that delivering that value proposition. If you come to the end of the year and you think, I don't think our value proposition resonates in the market anymore, well,
Shift it.
that you're not talking about growth anymore. So
Yeah, yeah.
it's all about something very different. So
Yours is an
we
exciting time though, right? Yours is an exciting time.
yeah
If you're in that stage where, like, the growth periods are fun, aren't they? You're not they're getting your name out there more is like a lovely problem to have. You've got everything else set up, and you just need to get more out the door. That's a fun time, especially on, like, commercial director wise. That's a bit you can really get your teeth into.
yeah. No, it is. What products have we got? What can we do next? Where can we get there? Blah 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 blah. Um, the big thing is ensuring you maintain that focus and you don't get
Yeah,
dragged into the
yeah,
the day to day too much. And it's inevitable that elements of that happen. You need to understand what's happening on the ground, but you know that's the bigger picture. That's the vision. Are we
yeah.
moving towards
Strategy.
that vision? If we're
That's
not, what do we need to shift to make sure we are going in that direction? Um,
yeah.
and so yeah, keeping it at that level, but it's fun, and we're a business of 20 people now, so you can't come in and wear one hat. It's
Yeah, you've got
you're
to be
having to
agile. Yeah,
constantly think about everyone's role bleeds into to everyone else's, so that makes it fun, but it makes it a challenge to sort of every now and again take a step back. Where are we? What's
what do we
everyone
need?
doing? What do the numbers look like? Are we moving towards that vision that we agreed we were doing
Yeah,
at the outset?
nice. Good, good. Thank you. I appreciate that, Mike. I genuinely appreciate your time today. It is interesting. It's always. I love speaking to the lenders. I just think it's interesting to get everyone's take on the market as to where it is, and also just the real honesty about what is next for you. It's just about getting in front of people. Hopefully, this helps. I just found out yesterday that we average about 4,000 downloads a month, which I thought was just my mum and my kids that listen to this. So
You,
hopefully, this will get out in front of more people.
You've said that now, so I'm gonna have a look, and if it's less than 4,000 downloads this month, then I'm gonna take that personally.
I don't even know where you find them. My daughter told me. In all honesty, I can't see. I can't see where I get it. It's out somewhere. But I appreciate your time, Mike. And if people do want to talk to you about the products, or maybe not you specifically, but like the team, what's the best way to get hold of you or the guys at Signature?
Oh, literally, if people want to, I'm all delighted to have conversations with people directly. I think I always want to know what borrowers are asking their
Yeah,
brokers, what brokers are being asked. So, that's really keen. So, there's, I mean, my email is michael@signaturepropertyfinance.co.uk.
yeah.
Um,
And just so you know,
sure.
all of your socials will be on our socials
Yeah,
when
yeah,
when
yeah.
this goes
But
out. So we will
you
make
can,
sure.
and they can contact me on that. More generally, the team. There's an info @Signature Property Finance inbox that we can we can put you in touch with. But reach out. I'd be delighted to chat through um, anything really. Always happy for a
Yeah.
conversation that brightens up my day.
Good. Excellent. Thank you very much, mate. Appreciate it. And thank you, everyone, for listening on Spotify, watching on YouTube. And yeah, I really appreciate your time, Mike. Thank you very much. I will speak to you soon.
Yeah, no problem. Thanks for that.